Hello, my name is Andrew Peng. Welcome to another edition of CMS Forex News. Today's Friday, October 10th, 2008. Following the fall in U.S. stocks yesterday, the Japanese Nikkei index fell almost 10% in its first hour of trading. It closed the day down 9.6%. The sell-off flowed into the European markets as the key London index was down 8.8% and the DJ Stoxx 600 showed European stocks closing more than 7%. The pound-yen pair continued its descent. From yesterday's high near 176, the pair sank all the way down to 166, a 1,000 pip move in less than 24 hours. It did find support there and recovered to 172 after the New York Open, only to have it act as resistance and push the pair back down. The Euro-Swiss Franc pair slid 370 pips overnight, accelerating a fall that's been more tempered during the middle of the week. The pair, which is a favorite for carry trade in European circles, slid to support near 1.5075 as stocks fell overnight. In the first minutes following the New York Open, the Dow Industrials plunged nearly 700 points to trade below the 8,000 mark for the first time since April 1st of 2003, though stocks bounced back in the following hour. After that, however, stocks resumed their downfall, and with the Dow index down almost 400 points by 1 p.m. Eastern. The dollar-yen pair fell 300 pips from yesterday's peak overnight, but traded higher in the New York session. The pair opened the week at 105 and by noon Eastern Time was down 550 pips, so the selling momentum in this pair seems to have faded after the Asian session. In fundamental news, the U.S. trade deficit shrank in August as both exports and imports fell. Imports were down as oil prices decreased and there was less crude oil purchased amid a weakening economy. The trade deficit amounted to $59.14 billion, a 3.5% decrease from July's revised figure. With its major trading partners slowing, the U.S. saw exports decline by 2%. U.S. import prices tumbled at their fastest pace in nearly 5 years in September. The 3% fall follows a downwardly revised 2.6% drop in August. Last month's decline was the largest since April of 2003. The easing in import prices suggests that producer and consumer prices will also fall. The euro-dollar pair broke its recent line of support in late trading yesterday, and the euro paired all of its gains from the last 3 sessions, falling back below 1.335. With the financial turmoil continuing, investors are looking to the safety of U.S. Treasuries. In Canada, employment increased by 107,000 in September, though 97,000 of that was due to an increase in part-time work. The unemployment rate remained at 6.1% when forecasts had it edging up. The Canadian trade surplus increased to 5.8 billion Canadian dollars in August, as imports declined 5.8% due to lower imports of energy and automotive products. Exports were down 1.6%, so the overall balance moved in Canada's favor. In a third release, the new housing price index saw flat growth for the month of August and increased 2.3% compared to a year ago. That continues a pace of decelerating price growth in the Canadian housing market. Despite the better-than-expected jobs and trade news, the U.S. dollar-Canadian dollar pair jumped almost 500 pips from its open to test the 1.20 level. In the last 3 days alone, the pair has jumped 1,000 pips as fears of a global recession pressure commodity prices, which in turn have hurt commodity currencies such as the Loonie. Finance ministers and central bankers from a group of 7 nations began meeting today in Washington and are expected to begin hammering out a round of coordinated, uniform measures to try and stem this crisis. On Monday, the U.S. celebrates Columbus Day and banks will be closed. Later in the week, the U.S. will release data on producer and consumer prices and retail sales. And that wraps it up for the week in Forex News. Join us again next week right here at cmsfx.com.